Hello, everybody. It's Andrew from Stock Money Lizards here to give you an update on what's going on in the Bitcoin price, as well as then move on to what's happening with the Bitcoin versus Ethereum chart, mostly because this is of interest to us if we hold altcoins. So I just want to start today by having a little discussion as to what is a falling wedge. This bullish pattern is a pattern that appears in the financial markets and characterized by two downward sloping trend lines. This trend line of resistance and this trend line of support. What you can see is that they end up being quite far away from each other in a sort of concave manner. And then they start converging slowly down to a single point. A falling wedge is created by having a high and a lower high after that, with at least 3 touches on the resistance line. And then you have to form a support line, and that's created by having a low and a lower low with at least 1 touch and 2 touch to form your support trend line. These trend lines are formed by connecting the highs and the lows, and the pattern is considered complete when the price breaks above the upper trend line. So we're looking for somewhat of a break to the upside out of this resistance line. And normally what happens is we end up having a nice price increase. It's important to note, however, that falling wedges are not always reliable, so do not just take decisions based off this falling wedge. So if we go to 2013 bull run, we can see that sort of we pushed. We're looking at the Bitcoin Euro version here. We can see that we made a push out and then we started to converge down to this single point over here. So we made a high, made a lower high, made a lower high until we broke out from this pattern. That's 1, 2, 3, 4. And this is now our resistance line. We then formed a support line. Now let's ignore these touches here where the candle wicks down. Let's take this as our first base for a low. We then touched it slightly over here, but we got a nice second touch over here to make a lower low compared to the previous. So this played out over about 473 days, of which after these days, we entered into an accumulation phase of about 235 days. And after that, Bitcoin obviously went on its bull run, breaking previous all-time highs. So we have 3 areas of interest to us. These are downtrend, and this is what we can identify as being a falling wedge. We have the breakout of this resistance line that ended up retracing back down to the resistance line, which is now support. So if you drag this out, this becomes support for the breakout. What happened then was we had accumulation where you had considerable amount of time to catch prices at this level before then breaking out. So we made a high, we retested that high, and then on the third attempt, we bust through the door and we started pushing upwards. If we look at 2020, this was essentially after we had that capitulation from the 2017 16K high in euro, where we dropped down, we found accumulation in this area, pushed up, and then we started forming this interesting pattern. Now, this is not really and truly your stereotypical falling wedge. However, we did get a low, we did get a lower low, and we did get our final third low. We got a high, we got a lower high, somewhat of a lower high, and then we retested these lower highs before accumulating and finding areas of accumulation before then breaking out of this resistance line. This can also be another chart pattern called the megaphone pattern, bullish megaphone pattern, which we won't really get into today. However, what we can see here is that we had converged to a very small point, and then our cone started to increase wider and wider before settling at our resistance line before pushing out and breaking out and making new all-time highs. Now, fast forward to today. Let's just draw out a support line and let's draw out a resistance line. So this was our high in November of 2021. We made the all-time high of Bitcoin. Seems like it's a long distance away. We made a lower high, and we somewhat made a lower high back in 31st of October 2022. So we have one touch of the resistance line, two touch, three, and we have one support area, two support area. So what we know is that for a falling wedge to take shape, we need two touches at the support line, and we need at least three touches at the resistance line. So if you look at where we are at the moment, I mean, Bitcoin's in a very interesting position. Why? Because really and truly, let's assume we go back down to these areas. Price lower than 13.4k euro is not really anticipated, at least in my opinion. However, we are starting to break through this resistance line, and our 20-week moving average is starting to come down to levels of interest. We know that Bitcoin is normally extremely bullish when it enters into a level that is higher than the 20-week moving average. So if we see this concave pattern forming down to a single point with its 20-week moving average also consolidating back down, what could possibly happen is one of two things. Either we break out to the upside and maybe we stop at somewhere in these levels of 30k, which coincides with this base or this base. So between 30k and 26k, this could be one potential breakout for Bitcoin. Or what we can do is follow a similar pattern to what happened in 2013, which I find particularly interesting because a lot of analysts had compared the run of 2021, 2022 to 2013. So if we do break out a bit tamely from our falling wedge, slightly tamely like we did back in 2013, probably we might be entering into a nice accumulation phase. So if we go back to our chart here and we go back, we can see here we've currently been about 434 days, which is quite similar actually to 2013, where it took us 442 days. So we're somewhat in the same region here. What could possibly happen is we break out to 22,000, we possibly come back down, even a bit lower, push back up 22k, somewhat in this area, make an accumulation phase, and then we start breaking out. So this is a second option that we could possibly go down the route of with Bitcoin's breakout and essentially end this bear market of Bitcoin. I'd like to go into the Bitcoin dominance chart and just have a quick outlook on what's going on here. So basically, Bitcoin dominance is a measure of the percentage of the total market capitalization of cryptocurrencies that is attributed to the Bitcoin network. It is calculated by dividing the market capitalization of Bitcoin by the total market capitalization of all cryptocurrencies. For example, if the total market capitalization of all cryptocurrencies is 100 billion, and the market capitalization of Bitcoin is 35 billion, then Bitcoin dominance would be at 35%. This means that the value of all Bitcoins in circulation accounts for 35% of the value of all cryptocurrencies. Bitcoin dominance is used as a way to gauge the overall strength and adoption of the Bitcoin network relative to other networks and cryptocurrencies. If Bitcoin's dominance is high, it may indicate that it is the dominant cryptocurrency in terms of usage, adoption, and value. On the other hand, if Bitcoin's dominance is low, it may indicate that other cryptocurrencies are gaining ground and may be perceived as more valuable by the market. So basically, upon Bitcoin's inception, Bitcoin was the entire market, as you can see. And in February of 2017, it started to drop off. Now, the reason why it dropped off was because altcoins started to become even more popular in the market. So what happened after 2017-18, it coincides with Ethereum's launch, Bitcoin's dominance started to fall, making a low of 35% of the total crypto market. It then had a run up, made a high, made another high, and then it suddenly plummeted once more, which basically means that the altcoin market was relatively strong in this area. However, what we can see now is that Bitcoin has been in this area for a considerable amount of time. And what can we expect to happen in the near future? Is it more likely that Bitcoin loses its position and it goes down further? That's probably unlikely. Why? Because the technicals show us that we made a low and this run-up was full of higher lows. We then made another base and we formed a base between April of 2021 and January of 2023, which we're at the moment. And this support line is also higher than the 2018 February low. So the reason why I'm bringing this up is because I'm about to jump into the Ethereum Bitcoin chart, and I'd like to then move on to the fundamentals behind what Bitcoin is versus altcoins. So before we're going to jump into the Bitcoin Ethereum chart, let's have a look at what Gary Gensler, the chair of the SEC, has said about Bitcoin.
Financial assets we call securities. And many of these financial assets, crypto financial assets, have the key attributes of a security. So some of them, they're under the Securities and Exchange Commission. Some, like Bitcoin, and that's the only one, Jim, I'm going to say, because I'm not going to talk about any one of these tokens, but
sure,
my predecessors and others have said they're a commodity. Working together, there's two great market regulators in this country. I had the honor to chair the CFTC, a terrific agency. I have the honor now to chair the Securities and Exchange Commission.
That was just a small piece to show that Bitcoin is actually being deemed as a commodity by Gary Gensler, the SEC and the CFTC, which is an extremely bullish statement to make. And the reason why it is a bullish statement to make is because regulation seems to be on the horizon for the altcoin market. So this is why now we will talk about the Ethereum Bitcoin chart. Ethereum Bitcoin chart is a really interesting one because when Ethereum outperforms Bitcoin, that normally happens in a bull market. However, sometimes, especially during a bear market, Ethereum goes down versus Bitcoin, and the altcoin market goes down even further. So this chart is a proxy for what is going to happen possibly to the altcoin market. As you can see, the altcoin market is doing pretty strong at the moment. Why? Because we just had a look at the Bitcoin dominance, and Bitcoin dominance is still hovering around the 41% mark, very close to that 35% mark we saw earlier. If Ethereum is deemed to be a security, and if you really look at the fundamentals behind Ethereum, well-known figures like Michael Saylor had come out and said that Ethereum is definitely a security.
You want a roadmap for how you create a commodity. You have to do it the way Satoshi did it. You create a protocol, you give it to the world, you disclaim beneficial ownership of it, you disclaim control of it, and you disappear. That's what Satoshi did. It was a gift to the world. If the founder is still around and the founder is a billionaire and the founder is spending hundreds of millions or billions of dollars to defend the token, isn't it obvious that it's a software company with an equity? There's a company. The company owns a bunch of it. They sell it to the general public, but they never took the company public. There's no disclosures, right? So the SEC's position is you're selling an unregistered security. It's a crypto token.
Why? It had an ICO. It is not decentralized. It has moved protocol from proof of work to proof of stake, and you change the monetary policy of Ethereum a number of times, then this is clear evidence that it is at least not a commodity. So if it is not a commodity, then it is likely to be considered a security. In any case, Ethereum breeds uncertainty. So with that uncertainty, what do we expect to happen? For the last 637 days, Ethereum has been trending between 0.081 and 0.059. These are roughly 30% swings. Up, down, up, down. You could argue it almost broke out back in December of 2021, but quickly came back into this channel. And you can argue it almost broke down in June of 2022, but quickly found support and made its way back to retest the highs of 0.08283. What we see now is some form of pennant forming, where if you draw up a support line at this area and a resistance line at this area, you can see that you have a high, lower highs, until we're in a very critical point for Ethereum. If you look at the support line, you have lows and you have higher lows trending up the pennant. Pennants are really difficult to identify where they're going to go. So this is why I brought up the fundamentals behind what is Bitcoin versus what is Ethereum. If Ethereum is deemed to be a security, realistically, this is bad news or damning news to the altcoin market. So if Ethereum Bitcoin chart is a proxy for the altcoin market and altcoins start to take a hit, then Ethereum is likely to follow suit, and in my opinion, is likely to push more to the downside. However, this is not an easy one to call. It's just a very interesting one to call that we will keep track of. And the reason we will keep track of this is because it is important to allocate your portfolio in coins that reap you more Bitcoin by holding those coins. If you hold a coin and its value goes down versus Bitcoin, then essentially you might as well hold Bitcoin. And vice versa, if you hold an altcoin like Ethereum at these levels, then upon its breakout, you now have a higher valuation of your coin versus Bitcoin. So watching this Ethereum versus Bitcoin chart for me is really, really interesting. We'll keep track of it. So guys, this has been my update for Stock Money Lizards. This is my first update. This is something I will be delivering on a weekly basis. I hope you have enjoyed it. Please note that this is not financial advice. Please do not take any trading decisions directly from what I am saying today. This is purely just a video to commentate about my opinion as to what is happening in the market today. Have a great day, and I wish you all the best.